So over and under absorption of overheads. Okay. The following data relates to Lola Limited for 2010. We have here budget information, and then we have here what? Actual information. So we're asking ourselves, the company estimated to work for some 20,000 hours, or that's the total activity level when it comes to the time required to produce our goods, 20,000 hours in total for the entire year. And from that, they were able to estimate that they were going to spend $80,000. This is something they did when they were planning, and I want you to understand that. Okay? But this 80,000 does not in any way represent what they are actually going to spend. When you come here, we have actual data. Now, when you come to the actual data, this represents actual information that we gathered at the end of the year. This we can only arrive at by planning. This information we can only get from what? Actual happenings or actual activities which occurred during the year, okay, at the end of the period. So at the end of the year, we actually saw that, oh, we incurred what? $90,000. But one very important thing you need to note is that this higher overhead cost we incurred, we can clearly see was as a result of what? Working more hours than we planned to work. So it just makes sense that our cost will be what? Much more higher than we planned for. So there's a difference of, I believe, $10,000. The question is, does this $10,000 represent an over or under absorption? Or if we are even comparing or trying to evaluate our performance, do we say we have done well or not? Where if we have done well, were we able to keep our costs low? And where if we have not done well, was there a situation where our costs were higher than what we planned it to be? I hope that is clear. All right. The main issue for us here is that it may be very difficult to use that $10,000 difference I've mentioned here to evaluate our performance, to say, oh, we have done well, oh, we have not done well. Why is that so? I earlier mentioned that if we actually use 22,000 labor hours in our production, and as a result, the overhead cost incurred here is $90,000, then it makes sense. Right? So that difference we are seeing really is more or less, it actually makes sense that that is the situation on the ground. What that means is that if we had actually worked or used 18,000 labor hours, then our cost would have been lower. Okay, would have been lower. All right. So the fact that the activity level here, which is the labor hours we plan to work, being different from the actual hours which we use, the fact that they are different, it means that their resultant costs, if they are different, will make sense. And so comparing these two different activity levels and using their resultant cost to assess your performance is not the best way to go about things. It's not the best way. Okay? And that is where we will have to compute what we call the overhead absorbed. And per the formula for calculating the overhead absorbed, which I'll talk about very soon, once we calculate the overhead absorbed, it gives us a better basis for comparing our budget figure, which is whatever it will be, to what our actual overhead cost figure. And if there are any differences, which will not be the true over or under absorption, we can then what? Compare performance and see whether the company has done well or it has not done well. All right. So let me take everything I've said from the top. Per what we have here, per the information, right? The budget was to work 22,000 hours. We actually worked, to work 20,000 hours. We actually worked 22,000 hours. The cost we envisaged for working 20,000 hours is 80,000. The actual cost we incurred for working more hours was 90,000. So $90,000 minus the $80,000 will give us what? $10,000. Okay, which is the difference. When we come to the question we have here, it says we should calculate the OER, which is required to determine whether what there is an over or under absorption of overhead. So let's do what the AC is, and I'll compare it with what I've done above. Okay. All right. So the OER, someone should help me. What will the OER be? What will the OER be? We are building up on all that we have done earlier. So please help me. What would it be? There's a chat. Yeah, Millicent. Right. What would it be?
That please is $80,000.
$80,000, right? 80,000.
Over the 20,000 hours.
Okay. All right. So always remember, when you are computing the OER, we use what? The budget figures. The budget figures. Okay? The budget. All right. So divided by 20,000 hours. And that gives us how much?
$4.
All right. So $4 per hour. Very important. Okay. All right. $4 per hour. So this is the rate, overhead absorption rate. Okay. So it now says we should calculate whether there has been an over or under absorption. So let me write here. So this is actual, and this is what? Budget. And we had a difference of 10,000. All right. In calculating whether we have an over or under absorption, what we actually need to do is that we are going to compare, okay, the actual versus something we call the overhead absorbed, right? Okay. The actual cost, which is 90,000, we already know $90,000, right? That is this. But what is this overhead absorbed that Ruben is talking about? In getting that overhead absorbed, it is the actual activity level. And by now, you know what an activity level means, right? Actual activity level by the OER that you computed. Why is this overhead absorbed very important? when we want to determine whether we over-absorb overheads or we under-absorb overheads. The reason is very simple. I mentioned that since from the original data, the budgeted activity levels and the actual activity levels are different. This is 20,000. This is 22,000. This is like apple. This is apple. This is orange. And you can't compare apples and oranges. So we need to what? Be able to compare apples with apples and oranges with oranges. All right. So what that basically means is that we should be able to estimate a certain amount of overhead we are going to incur if at the time that we were planning, we knew that, oh, the company was actually going to what? Work 22,000 hours. Once we have that estimation of that cost, then we can be able to what? Compare the resultant orange from that computation with the actual orange that we have here. So I'm representing the actual information with what? Orange, and then I'm using apple to what? Represent the budget information. All right. So I have an orange over here, orange. And then I'm now coming to calculate another orange. And so where is that orangeness going to come from? The orangeness is going to come from what? This 22,000 hours. And so in computing the overhead absorbed, I'm going to use the actual activity level, which here is what? 22,000 hours, right? 22,000 hours. And since the overhead absorbed has everything to do with my original budget, that is where the OER comes into play. Because in determining my OER, what did I use? I used budget information. Okay, so 22,000 hours by what? By $4 per hour. That gives me what? 88,000 what? Dollars. So this $88,000 that I've computed is an orange. Why? Because it uses what? The 22,000 hours, which is what? The activity level for what? The actual information. So now I can compare this orange with this orange. So we have 90,000. And then if you subtract it from the 88,000, what's the difference? What does that give us? $2,000, I believe, right? $2,000. All right, which is the what? The difference. So what I have here in red, this difference of 10,000, we are saying this actual budget costs cannot be compared. Why? Apples and oranges. So in doing your actual over or under absorption, we have to make the two oranges. Okay, so orange and orange. And by the two oranges, we are saying let's use the actual activity level, which is an orange, and multiply by what? The OER, and that was the absorption. I did earlier mention in the slide that if it's an under absorption, then it is bad for us because we were not prudent. But if it's an over absorption, it is good for us. Okay. It is going to be an under absorption. So this is just the rule. It is an under absorption if the actual overhead is greater than what? Than the what we call the overhead absorbed. Then it becomes what? An under absorption. But if the actual overheads are less than the overhead absorbed, then it becomes what? An overabsorption of overheads, which is good for us. To give you an understanding, what we are saying is that, oh, at the time that we were planning, right, we expected our overhead costs, which we are going to incur, to be 88,000. But at the end of the period, we saw that we spent 90,000. So that meant that we actually spent more. More cost will mean what? Lower profit. And so this 2,000 difference will mean that our actual profit should actually what? Reduce by the 2,000. And if your profit is reducing, then it's a bad thing for you. I hope that is clear. So this difference is what we call what? An under absorption. Meaning that when we're planning our overheads, we under assessed it. We under assessed it. And so it turned out that the actual cost is more than what we intended it to be. And so when we were planning our overheads, we would under assessed it. That is all. I hope this is clear, please. The understanding is quite okay. All right. Let's look at the second example. So let me add here. So this difference is adverse. Okay, it's adverse. All right. Okay, so we have the next question, example 2, which is great school, right? Great company budgets on working 80,000 hours per month and is having fixed overhead of what? Of 320,000, okay, for that period. During April, so we have budget information, right? So the overhead cost is $320,000. And then the hours that we intended to work were what? 80,000 hours. Then we have actual information. It says in April, the actual hours which we worked were what? Were less, 78,000, right? 78,000 hours. And then we are saying the actual fixed overheads which we incurred were what? 311,000, which makes sense, right? The fewer hours you actually work, if your costs are low, they make sense. Okay, so if there are any differences, I think the difference will be what? What will be the difference between these two? 20 minus. That'll be some $9,000, right? All right. This difference of $9,000, like I explained earlier, cannot tell us our true performance, okay, with respect to whether we have done well or we are making more profit or we are making what, lower profit. It can't tell us that because, again, this is an apple, this is an orange. And so to be able to find what the true difference is, we have to what? Go through the steps of what? Finding out what the OER is, computing what we call the overhead absorbed. Then when we find the difference between the actual and that overhead absorbed, we will get what? The true over or under absorption of overhead. All right, so here we will have what we call the OER. And since we already know how to compute it, that will be $320,000 based on budget information divided by what? 80,000 hours. And that'll give us an OER of, I believe, $4 per what? Per hour. Once we have this OER, we can use that to calculate what we call the overhead absorbed. Someone should help me. How do we calculate the overhead absorbed based on the information that we have here? Yes, Belinda. Belinda is on the call.
Okay.
Yeah.
The overhead absorption.
Yes, I can
Can you
hear
hear
you.
me? Okay. So it's going
Yes.
to be 78,000
Mhm.
by the 4 hours,
By the 4 hours.
if I'm right.
Are you sure? I don't do guesswork. Are you sure? Are you sure?
Yes, I'm sure.
Yeah, sure. All right, that's fine. Okay. So the 78,000 hours by the $4 per hour, right, will give us what we call the overhead absorb. And what is that going to be? What's that cost?
312,000.
312,000. So this is to see. So let me explain the overhead absorb again. This is to see again that if at the time that we were planning, right, we knew that we were going to work exactly 78,000 hours, then this should have been what the overhead cost that we'll be planning for. That is what it means. Okay. And so the 320,000 you are seeing here was because we thought we are going to work 80,000 hours. So if you knew this was what exactly you were going to work, then this should have been what the cost. So we are trying to correct things here. Okay. All right. So once we have this overhead absorbed, we can then compare it with what our actual overhead. Okay. So that will mean 311,000 minus 312, or we are comparing the two. The difference, I believe, is 10,000. Okay. Please forget about whether it is a minus figure, it's a negative figure, or a positive figure. Let me just do it this way. While we are comparing the two. Right. Coming. Let me do it this way. So we have the overhead absorbed. Then I'll bring here my actual overhead incurred, which is what from the question, $311. Okay. All right. So the difference being $10,000.
Says
Okay.
$1,000.
8,000 rather. Sorry, 1,000. $1,000, right? So please, the difference between the actual and budget figure, which this 9,000 we are seeing here, doesn't help us know our true performance. So with this, we would have said that, oh, the company was able to save like $9,000, right? And someone would have said, we have done well. Yes, we have done well, but comparing this with this is not the best way to go about it. It's not the best. Okay, all right. Rather, when we calculate this and we compare with the actual, the difference of 1,000 is the true measurement of our performance. Now, in this particular example, it appears that when we're planning, we plan to incur what? A higher amount as what? Overhead cost. But what actually happened? We incur less. So here, this is where the prudence concept comes in. We were very prudent. And if you are very prudent, it means that this is good for your company. Okay? In terms of profitability, having 312,000 as the overhead cost we're going to incur for the month of April meant that our profit will be what? Will be much more lower. But since it turns out that we spent $1,000 less, it means our profit will increase by this $1,000. So this difference is what we will term as what? An over absorption. Okay? An over absorption. An over absorption of what? Of our overheads. And it is what? Good for us. It is favorable. Okay? It is favorable. Because your cost actually turned out to be what? Lower than what you thought it would be. So that is good for you. Okay? It leads to what? Much more increased profitability. That is all. I hope that is clear. All right. So that is about that. Any question, please? Any question? Any question? If you have gotten this concept or what we have done here very, very well, when we get to what we call flexed budgets, okay? Flex budgets. We are going to apply the same idea over there. Please remember what I'm saying right now. We are going to apply the same idea over there. So please, if you don't get what we have done here, let me just spend the remaining time to go over this for you. If we are all okay, then that is great. Okay, we are going to apply the same idea over there. All right. Is there any question with respect to what we have done here? Any question, please? Any question? All right, that's good. If you can't ask your question in class, ask me the question in the back door, okay? I'll answer it for you. All right, so that is about that. We have some, I think, 15 minutes to close. Let's touch on these things and then we can get out of here. Remember, we are still looking at how to arrive at the costs, okay, of a company's product or arrive at the cost of a service that the company is rendering. And we have these two approaches or ways of arriving at the cost of what? A company's product or service. We have what we call the absorption costing approach, and then we have what we call the marginal costing approach. So we have now understood what forms part of the cost of a product, how to charge or absorb our overheads using what? The various bases of absorption. But we are saying companies may have what we call what? Ways of what? Deciding what should be included as part of the cost of their product and what should be what? Left out. And those two approaches or ways are what we call what? The absorption costing approach and then what we call what? The marginal costing approach. All right. Together, we call these two approaches, you see it somewhere, the traditional, okay? Traditional costing approaches. Traditional costing approaches. Okay, so take key note of the word. So if you say something is traditional, it means it is an older way of doing something, right? Or the old way of determining the cost of what? The product or service. All right. Why, first of all, even before we get into it, why is it important to know the cost of what? Or determine the cost of a company's product? Why do we need to find the cost of a product? Why? One, knowing the cost of a product you are producing or a service you are rendering helps you when you are what? Valuing your inventory in your financial statement. Okay? When we produce goods, sometimes we may not be able to sell all of the products we have produced at the end of the period. And so what typically we classify the remaining goods are what? Our closing inventory of what? Of our products, closing inventory. So for those closing inventory or those inventory in your company at the end of a particular period, you need to what? Show it on the face of your financial statement. And the way we value those inventory is what? By using the cost of the product. So it is one of the purpose or why we need to what? Ascertain the cost of a product we are producing. Okay? All right. 2, it helps us in determining the profit we can make on what? On our product. How do you determine the profit of a product? You determine your profit by taking how much it costs you to make the product from how much you sell the product. And so if I don't know how much a product costs, how will I be able to know the profit I'm getting from it? Okay? So determining the cost of a product you are going to sell or produce at the end of the day will help you determine your profit from producing and selling that product. 3, it helps you in what? Pricing. So when we get to pricing decisions, there are various ways we can price our product. One of the approaches is what? The cost plus approach. And what that basically means is that you will need to determine the cost of the product. Then we are going to what? Add our profit to it, or what we call a markup to it. Then once we add that markup to it, it gives us what? The price of the product. So for companies, when it comes to pricing their product, they will first of all need to ascertain how much the product costs before they can arrive at the price of the product. So it is one of the reasons why we need to know the cost of our product. And finally, it helps us to make decisions. So I was explaining earlier that if someone approaches you, oh, do a job for me outside of your normal production that you do, before you tell the person, yes, I can do it for you, or no, I will not do it for you, you need to know how much it costs you to do the job. Once you know the cost, you compare it with how much they intend to pay you. If the amount they want to pay you for the job is lower than how much it is costing you to make or produce the goods for them, then you can make a decision to say, yes, I'll do it, or no, I'll not do it. That's all. Okay? So understanding or estimating the cost of a product or service you are producing helps us to make very important decisions. I hope that is clear. All right. So I will not take it further. We have done a lot, right? We are just going to end it at the purpose of determining the cost of a product. On Monday, we are now going to delve into the traditional costing approaches, which are the marginal and absorption costing approaches. If there is time, we are going to add ABC. ABC stands for activity-based costing. So it also means that ABC is another approach to determining the cost of a company's product or service. Okay? All right. So once we are done, we'll get a full picture of the various costing approaches for companies. All right. Any question, please? For me, any questions on what we have done for today? Any question? All right. If you're okay, let me just see a thumbs up. Something, a sign to show that we are okay. One sentence where I know that there's a problem somewhere. Okay. All right. Okay, that's fine. Sure. So we'll end the class here. Monday, 6:30. We are going to continue. Enjoy the rest of your weekend.